Good evening. It's 18th August, Sunday, 8:30 p.m. I hope you had a wonderful 4-day weekend. I had gone on a holiday with my family, and it was wonderful for me. We had gone to Wayanad. On Friday, I had mentioned that in the morning, I had mentioned that the global markets are all on a rise, and there is no reason why Indian market should remain as it is. The crisis in the global market started with the yen strengthening from 162 to below 141, and everything collapsed in that short span of about a week between August 1 and say August 8th. Subsequently, the markets have recovered everywhere. Our market was the last to recover, though our market was the fastest to move up since June 4th. Now, this is, in my opinion, a very important podcast for me because I have always believed that when the market scales walls of worry which look insurmountable, then sooner or later, we will, reach what we call a parabolic stage. This has happened in 2000, for instance. This has happened in 2007. This happened in 2016, 17. This happened in 2017, 18, and then it's happened in 2021 to some extent. What we call the parabolic rise in the last stage. So I believe that we are going to get a parabolic rise globally, and India will not be any different. India will not be an island. Now, this flies contrary to the fact on the ground, which says that fundamentals are poor, getting poorer, corporate results are bad. In fact, only among, if you take the average growth in profitability in Nifty stocks, as per some report, is only about 5%. So, if it grows 5%, how can we have a PE ratio of 24? But then I have seen in the past, beyond when it reaches parabola, then fundamentals don't matter to that extent till the parabola gets completed. Purely based on price action and liquidity, I believe we are in the beginning of a parabola. In certain cases, the parabola might have been completed. In case like some defense stocks, like Garden Reach, for instance, it went up by about 4 times between March 15th and mid July, 3.5 times. From 700, it went up to 2,800, which is 4 times. Nifty has not done that, and certainly Bank Nifty has been very dull. So I believe that this rally now will be led by the banks, mainly HDFC Bank, ICICI Bank, Axis Bank, and the PSU banks will follow. And overall, the Nifty rally will be led by again the large stocks like Reliance and Infosys and TCS, L&T, and the auto stocks. This notwithstanding poor fundamentals. So, if you keep the fundamentals aside and if you just look at price action, you will begin to understand what I'm trying to say. I was also very skeptical of the markets, as I've been mentioning, till around 23rd of till around 23rd of June. From the lows of 4th of June, when the market crossed about 23,600 and did not fall as I expected it to fall, somewhat replicating what happened in January of 2008. When that pattern failed, I just realized that we are having a parabola which will come. From 23,800, it went up to 25,000. But if you look at from where it went from June 4th to August 1st, it has gone up about 18%. Typically, parabolas would be between 25 to 40%. We have seen a parabola of about 38% rally between September 2007 and January 2008, when the global markets had peaked out. And we had a parabola of our own, 38% in just 3 months. And then if you take it from October in 3.5 months, September would be 4 months. From October, if you take October 2007, because October 2007, all markets had peaked out. September, some of them were peaking out like China, DAX. But October, every global market peaked out excepting India. So if you take there, we were at 5,000 on the Nifty, we went up to 6,360 levels, which was about 27% in 3.5 months. So a 20% rally is not uncommon. At 25%, 20 to 27% is very much in the realm of possibility. So we have done 18% from 20. What was that? Somewhere around 21,800 to 25,000, and I think there is still more to come. However, much it looks logically not possible. So I'll just share with you about what happened in case of it is what has happened in case of Nifty, how Nifty has performed. So just let me go to the screen and read. Okay, now here, if you take from June 2023, is what I would say when the market broke the previous high, which was set in somewhere in December of 2022. So from there, you see it has. One minute, let me do properly here. Yeah. So if you see here, the high was made in December 2022, June. After that, you had the Adani problem in January 2023, and then it broke out somewhere in end June. I had then thought that the market will not break out, but it surprised me. That was the first time I got in this entire thing. I was surprised, and then it broke out, and then it was in a range between 18,000 around 18,900 to 20,000, a 1,000 point range. Then it again broke out sometime in November, early December, just before the election results came for those four states, and BJP won, and then it took off. This is a wave second, you can say. Then after that, it again oscillated in a narrow range, say between 21,200, another 1,000 point range. That was wave 3. Then it again broke out and moved to wave 4, which was between 21,850, around 22,000 to 23,000, another 1,000 point. So here we had 1,000 point. Then we had another 1,000 points in second wave, third wave another 1,000 points, and fourth wave we had another 1,000 point. Then the fifth wave has now started, in my opinion. We are not. Please don't confuse this with Elliott fifth waves. These are waves which I have marked based on consolidation and then breakout. So this is just numbered 5. It got nothing to do Elliott wave. Please don't, Elliotticians, don't jump on me. If you hear me properly, you'll know what I'm talking about. So in this fifth wave, we have gone up over 2,000 points. From 23,000, we went up to 25,000. This is a breakout where I felt that now the market is not going to listen to the fundamentals anymore. So from 21,000 to 80, if you take up to 25,000, it will come to about 18%. It's about 2 weeks. So in my opinion, there is no rule that it has to be more than 20% or 25%. But in a parabola, you will notice that the way it will go, you will understand why. You can sense the parabola. Basically, there will be extreme volatility. There is irrational exuberance. There's a FOMO factor and rapidly increasing prices. We have not seen rapidly increasing prices as in the last 2 months, really speaking, because not all prices have gone up. Many stock prices have come down significantly. That is why I believe a lot of parabolas have already happened in the market. So the final parabola which we're going to have is likely to be only in the mainline indices, Nifty and Bank Nifty. And in the past, we have seen Nifty peaking out at 28 PE. Today we are at 24 PE. So we can still have another 15% at least before the parabola should get completed. 15% from here looks quite high, nearly 29,000. But if you are really getting into parabola, those numbers can come. What can make the parabola happen, in my opinion, is that there is loosening of liquidity and fear from the central bankers. Like in Japan, for instance, central bankers are fearful that if they raise interest rates, then the markets will collapse. So therefore, the Japanese government will either increase liquidity, or they'll let go of their tightness in their fiscal, the way they're going about controlling interest rates. On the other hand, Fed has got lots of things to improve upon and increase reduce interest rates. September is when the meeting is on, and I expect a 50 basis point cut. Next week, on Friday, we have the Fed chair speaking at the Jackson Hole, which will give us where what the Fed's mind is, whether it will be 25 or 50. 25 is guaranteed as far as the futures markets are concerned. They are very clear it will be 25 at least, and maybe 50. I have a feeling it will be 50 because I believe that the Fed is behind the curve, especially in looking at unemployment numbers and inflation numbers. Surely Fed is behind the curve. So are Indians. Indian RBI, in my opinion, will have to cut interest rates in October when they meet. I think they are also behind the curve. They would have seen food inflation dropping at that point of time. So therefore, I believe that we are going to see some real rallies coming up, especially led by Bank Nifty. It is unbelievable at this point of time because Bank Nifty has been underperforming. So you may feel that Bank Nifty may not do well at all. If you look at Bank Nifty has topped out sometime in 3rd of July. After that, it has not made a new high. So there is a divergence between Bank Nifty and Nifty. A lot of people may feel that because there is a divergence and Bank Nifty is generally a better indicator of the markets, so therefore the markets may start falling down. But I feel this is the pause which refreshes, and Bank Nifty should see higher highs, maybe 55,000 plus. We should see in the next few weeks. Please note that I am not a SEBI registered advisor. This is not some investment advice. This is what my thinking is at this point of time. Of course, when will it negate? It will get negated if, for instance, this Nifty is a good indicator. If it starts below 24,000 for a few days, I would say the better number would be 23,100, 23,200. That may be a better number, but that's very far away. So even if it starts trading at 23,500 or something like that, then we need to worry and think that parabola is not coming. But the conditions for a parabola are there. We have not seen such kind of conditions in the past where the Fed is going to cut interest rates, Japan is not going to raise interest rates, and RBI has held the interest for a long time. So these are the main conditions. I'm not so concerned about what is happening in SIPs or FI investment. That may add fuel to the fire. But independent of that, if the global central banks begin to ease, the markets, at least in the first two cuts, the markets will go up. At least the first cut. Even in 2007, when conditions were very bad, after the first cut, the market went up for about 3 weeks and made a new high, all-time high in Dow, and then started coming down. So here, things are not as bad as 2007 as far as the macro economic conditions for the Fed are concerned, but they are simmering in the underneath, and they will come to once the rally goes to parabolic levels. So I am personally bullish on banks, large caps in that, and across the board large caps, as I mentioned. And please note that in a parabola, again I repeat, that not all stocks will participate, and some stocks might have already, they might have already hit their levels. So the parabolic levels. So I wouldn't know whether they will participate again. I'll just share with you the Garden Reach, for instance. Uh, I think Garden Reach, for instance, has got a parabola, and see, from 700 it went up to 2,800 in very short span of times, and it started coming down. It is probably not coming down fast enough because the entire market is quite strong. But I think railway stocks, defense stocks, and those kind of stocks which have P ratio of more than 70, 80, 100, 150, they may not participate in this parabolic rise. So parabolic rise, I'm looking at Nifty and Bank Nifty, and there too I'm looking at select stocks. So those are the stocks I think one should look at. And we cannot really feel bad that how come markets are going up, fundamentals are not good. So when the next fall comes, it will be very significant, much more than the 18% fall which we saw in 2021. I think it will be more than 20%, but that is for another day. Till then, I would like to participate in this, and whatever knowledge we have gathered till now, and use that to select our stocks. So I don't have any advice to give. All I can say is that this, in my opinion, for me at least, this was a very important podcast. It is something which is going against the grain. I don't think anybody is talking of a parabolic rise. I don't think anybody is talking of numbers like 28 PE when we are sitting at 24 PE. So those numbers look ridiculous at this point of time, but in a parabola they become normal. So please do your own homework, and uh, please take advice from your registered SEBI registered advisors. This is Vijay here. Thank you for joining. I hope you had a great weekend, and I hope you have a great week ahead. Thank you very much. Good night.